right, gang, how to code a flip property purchase HUD statement onto the books. Okay, so we're going to take the HUD statement. No need to break it down since you guys are already familiar with how to read HUD statements, and this is a decently standard one. I will pick out one thing that you need to be on the lookout for to catch. And as we know with flip properties, we code them differently than rental properties. No need to belabor that point. So let's just get right into it, okay? So we're going to begin with the HUD statement. Take a look at the HUD statement. I know my face is no longer on the screen. Please don't panic. It does that when I open pretty much anything outside of the web browser, okay? So let's get in this HUD statement. So we can see the buyer. So this is the purchase HUD statement that we're entering. So this is the buyer. Settlement date back in 2020. So we're pretending that it's back in 2020. All right, so let's keep it moving. So this is the buyer's transaction. So we're working on the left side of this first page, okay? We see the contract sales price, all right, some settlement charges. So we'll dig into those. Those look a little inflated and we will see why. Okay, we have some earnest money clearing escrow. Principal amount of new loan. So there's a loan on this property, $32.80 worth of taxes that are being paid by the seller. I know it's confusing, but this is actually a credit to the buyer when it's in this section, okay? These are all credits. So earnest money, loan, and then this credit all add up to this. So it is confusing because it says unpaid by seller, but this is just this is saying the seller is responsible for this. So the seller's giving us this as a credit. Okay, so hopefully that makes sense to you. Excuse me. All right. So gross amount due from buyer. Of course, this is going to be these, the purchase price and then the settlement charges added up together. And then this total paid by or for the buyer. These are these three items added up. These are credits. And then that gives, the number that is due from the buyer at closing. So the cash the buyer needs to come up with. Okay. And so now we're going through the settlement charges. Okay. So we have some loan fees. All right. And this is a flip. Rather, if this was a rental, I would be talking to IRS publication 551 right now to how to address all these different fees and things, how we capitalize or deduct. But this is a flip property, so I do not need to talk to that stuff because everything's just going to inventory asset accounts. Okay, so origination fees, underwriting fee, loan doc fee, all the fees from the lenders, broker fee. And then this is what I want you to look out for and what we need to catch. Rehab holdback. Okay, so normally this is not within this section of the HUD statement. Normally it's up here in the credit section, but they have kind of snuck it in under here, items payable in connection with loan, which, I guess they're not wrong in doing that, but we normally see it up in this section of the HUD statement, and I think it makes more sense for it to be up here. So just look out for that. We've had a lot of bookkeeping team members kind of miss this line item or not know how to code it just because it's in a different section, but it's still a rehab holdback, so we treat it as such, okay? All right, and rehab holdback, if you don't know what that is, it's the portion of the loan that the lender is actually holding back from the buyer in an escrow account, in their escrow account, excuse me, to disperse to the buyer over time as they're renovating or rehabbing the property that they've purchased using this lender. So that's all it is, just funds to complete the renovations. So we have some mortgage interest, we have some an insurance premium, we have all the title charges, nothing out of the ordinary. And then we've got, deed charge, a couple of endorsement charges. So really nothing out of the ordinary here except for this rehab holdback being located within the settlement charges rather than, within this amounts paid by or on behalf of buyer. Okay. All right. So I think we've gone through all of this. So what I will do now is I'll go to QuickBooks. All right. My face is back. Excuse me, I've got a tickle in my throat. Okay, so what we're going to do is we're going to hit new. So what we would do first is we would go to the bank feed, okay, and we would look in the account that the transaction, the cash to close transaction, okay, and so the 27,795 and 67 cents. We would search that amount in the bank feed to see which account that money went out of, or if you know which account, then just go straight to that account, find that transaction, make sure it matches exactly with what is on the HUD statement. If it doesn't, you're going to need to go back to the law firm or back to your client and see if you can get an updated final HUD statement that reflects what actually went out or in your bank account, okay? Or your client's bank account, of course. Okay, so that's the first step. Once you've done that, now we know which account that we need to tie the journal entry to. So now we can go create the journal entry. So you're going to hit plus new, you're going to hit journal entry, all right? And then I will bring you back in. I will complete the journal entry and I will bring you back in and we will go over it, okay? I'm going to pause this really quickly. Okay. Now we are within the journal entry. I've input everything and debits equal credits, which means I did something right. So we have the settlement or the disbursement date. I like to put the disbursement date on there because that's the date the funds actually go out of the account or come into the bank account, okay? I like to put a nice searchable journal number. You are not going to check off, is this an adjusting journal entry? You're not going to check that because physical cash is actually going out of the business or coming into the business, right? Okay, so flip purchase price, if you remember, was $90,000. And so everything is going to an inventory asset account, except for the earnest money deposit, the hard money loans principal. This was a hard money loan to purchase this property. Seller concessions. So you can create a seller concessions received at closing inventory asset account for your flips. It will create a negative in that asset account because these are funds that were received, right? So I usually create this account as a revenue account or an income account, all right? And when we credit income or revenue accounts, that's a positive. So that means $32.80 came into the business. So that's how I like to do it. But it's all preference, right? It all comes down to preference. Some people want to see absolutely 100% of all transactions in the inventory asset accounts, including income deposits, which create a negative in the asset account. So that you can just pull a balance sheet while the flip is in progress and see everything, there within the flip accounts. You still see everything because this will show up on the net income line on the balance sheet for the flip property. So you still see everything with this method. Anyways, I'm going to get off my soapbox with that. It all comes down to preference, okay? So, again, flip inventory asset, all the buying and closing costs. We have separated out the rehab escrow, okay? So rehab escrow, it's a other current asset account. To cause an asset account to increase, you debit it. Okay, so that's why that's debited. The loan interest, right? That's separate from buying closing costs with how our chart of accounts is. You can just have a buying closing cost account and just book everything to that. We like to separate things out to provide a little bit of granularity with our financial statements, okay? So loan interest, again, everything is flip inventory asset account, insurance, and then, okay, so we went over everything. Let's make sure we have a project. Okay, so for the purposes of this course and actually what we do in our firm is for all flip properties, we use projects. And so inventory, asset transactions or balance sheet transactions do not show up within the project feature within QuickBooks. So we will not be able to see this on the dashboard within QuickBooks until the flip is sold, and then all of these transactions and balances are transferred over to cost of goods sold accounts. then they will show, nice and neat on the project dashboard. But we like to do that just so, once we're at the end of the year, our client or we have sold, let's say 10 or 20 flips in that given year, we can just run down that project dashboard and see, what our profit margin was, what our actual profit, the dollar amount was for each flip, very quickly, just scrolling through without having to pull a financial statement for every single individual flip property, right? So that's just a good quick reference for us as the real estate investor and also for our clients. Okay, I'll get off that. So this, in this specific case, which is really neat to show you guys, let's say you or your client paid for this flip, the cash to close, from a personal bank account, and they do not plan, to get reimbursed or anything like that. They're essentially making a contribution to the business. You're going to book this as a member contribution, okay? Even if they are going to get reimbursed, that will be a member distribution to the member from the business. So member contribution, this is how we do this. If this is, cash to close from personal account, okay? And so that's a credit since money went out. Okay. Make sure debits equal credits always. I like to upload the HUD statement we're working off of to the journal entry so it's there for reference for the future if anybody wants to go in and double check or what have you. What else do we need to cover in this video? If this is a different entity, a separate entity of some sort, you will put that here, right? So if this was 119 Layla Lane LLC, then that would go here and you'd have it for every single line item, okay? Same with classes. If you're keeping up with properties using classes rather than the customer feature or the name, then you would have 119 Layla Lane in each of these class markers, okay? Searchable journal entry number, already hit that. Make sure your date is correct, right? You won't be able to find, if this transaction came through your QuickBooks bank feed, you won't be able to find that transaction unless you have the correct date. It gives you a plus or minus, a couple of weeks. Okay, excellent. So I'm going to hit save on this. All right. Okay, and then what you will want to do to check your work. Okay, wow, that took a while to load. So what you will want to do to check your work is you will want to go to reports, hit reports, and then you are going to pull a balance sheet report, okay? Once you're in the balance sheet screen, you're going to hit all dates, totals only. Let's do cash. Come over to customize. I like to do negative numbers in parentheses and show in red to make them pop. You're going to go to filter. You're going to check customer. And then you're going to select both the customer and the sub-customer, which is the project. So we booked each transaction to the project. So once everything is done, everything shows up in the project after the flip is sold, of course. But you're going to check both of these just in case you made a mistake. This will catch everything. You're going to hit run report. Okay. And you can change the title too, 119 Layla Lane balance sheet, all dates. You can put your logo up here. You can do all sorts of things within the customizations, but we just want to check our work to make sure everything was input correctly. Okay. And so purchase price, all this stuff looks good. And then boom, we see a negative, right? So all this means is the original $2,000 earnest money deposit that went out of the bank, out of your bank account or your client's bank account to the law firm to hold until closing. It just means we haven't processed that transaction. Okay, so once we process that transaction from the bank feed, then this earnest money asset account will be zero. Okay. And so we have processed the clearing escrow transaction through the HUD statement that happens at the real estate closing. And so this is why this is a negative number. Okay. Now, do we have any other negatives? So rehab escrow, that is correct. Hard money loans, again, correct. Member contributions for this specific property, correct. And then here's that net income transaction I was speaking to, okay? The credit for the county taxes from the seller to the buyer. We coded it to seller concessions received at closing income account. And so this shows up on the income statement. If we click this, it's going to take us to the income statement, okay? And so as we can see here, other income, seller concessions received at closing, there it is. So this is, I mean, that is how you code a flip purchase HUD. It's decently simple. Where the complexities come in is, you know, maybe some non-traditional lending or something like that. Maybe it was purchased subject to the mortgage, you know, maybe some creative finance worked into there. This was very clear, just a hard money loan with a rehab escrow. So pretty standard for the industry, but things go a little differently when you incorporate creative finance. But you know, this HUD statement's very, very straightforward. And that is pretty much everything you need to know. So we handled the bank feed. In this case, there wasn't a bank feed transaction because it was paid from a personal account. And we checked our work after we input it. So we should be good on this one. Thank you.